I'm Crystal Stranger with Cleer.tax. I'm here to share the tax information I have and you need. If you like this video, be sure to subscribe and give us a big thumbs up. So a question I get asked a lot is if foreign owners of U.S. companies can really have tax-free income. And yes, under certain circumstances, this is true, although not as widely available as often what's promoted on Reddit and other online sites, right? So one thing to note is that there's a difference between whether it's a corporation like a C-Corp or an LLC. They have kind of two different sets of rules of what is and isn't U.S. source income and what does or doesn't flow through tax-free. And it's pretty opposite, actually, what you get tax-free on each one of those categories. So for C-Corps, for example, capital gains typically are not taxable to any foreign owner of a U.S. corporation. That dates back to like a Kennedy era law of, exempting tax on foreign investors in U.S. corporations to try to boost our U.S. companies and provide capital. And those laws are still on the books. So if you sell your stock as a foreign person, those gains are typically tax-free. However, that does not apply to earned income or dividends that are paid out of earnings and profits. Those clearly are, our income. So sometimes you can end up with a deemed dividend at the end, even because you have a large amount of earnings and profits that are sitting there and were never paid out, right? So there are a little bit of risks there. It's not always so cut and dry. For LLCs, there's two different structures that LLCs of foreign owners fall under. You have the single owner, which is a foreign-owned disregarded entity, and you have a partnership, right? Which is if you have two or more owners. So you can end up with non-U.S. source income, say with services or goods that are provided outside the U.S. and sold to other individuals outside the U.S. And then that income passes through the LLC, which is a pass-through entity, to the owners of the company who are providing those services outside the U.S. And it becomes not U.S. source income as long as nobody involves a U.S. person really there, right? But it's kind of a gray area where that income is taxable. Generally speaking, that's not taxable in the U.S., but it should be taxable under your home country's tax laws. Not every country taxes that. It's important to always talk to a tax expert in the country that you live in and make sure that that is indeed valid and you won't be taxed on that income, or if you are taxed on it, it's taxed at a rate you can live with, of course, right? And then for U.S. source income, though, so if you come to the U.S. and you're working here, or if you are selling products into the U.S. specifically, well, then you're likely going to have U.S. source income, and that will be taxable. And if you have a foreign-owned disregarded entity, you have a partnership, then you're also going to have to report that income on additional forms on either 1040-NR if it's individual owners, or 1120-F if it's corporations that are owning the U.S. LLC, in order to pay the amount of tax that's owed to the U.S. Anyway, thanks for joining today. If you need help with taxes, visit us at Cleer.tax today. Cleer is your tech-forward financial solution for startups and growing companies. Please remember to subscribe and give this video a big thumbs up.